Joining us now is Evercore's head of internet research, Mark Mahaney. Mark, it's far from where a bunch of market strategists were at the beginning of the year, and they said stay away from tech. I think your price target on Alphabet for a while was 130. You had a buy, but we're awfully close to 130 now. Meta, you think, still has farther to run. Why is that? What are the underlying things that you think people should still be considering with those stocks?
Well, look, the setup on tech stocks generally, but in those names specifically, was that they got so whacked down last year in terms of their multiples, in terms of estimates, and then you had RIFs that just a reduction in force, which just meant that the multiples were de-risked, the estimates were de-risked. It just made it a lot more, the outlook was much more constructive going into this year. And I think, frankly, it still is for some of these names. I think Meta is actually still your best play. I know it's had a huge rally year to date, John. I know that. But it's trading at 15 times GAAP earnings. It's the cheapest, high quality, large cap tech stock out there. That's my argument. I'm sticking with it. They've also got nice product cycles that'll cause this acceleration in revenue growth through the balance of the year. And I hope that they really caught cost religion. If that's true, you'll have margins go up too. So I just think there's a lot of upside in that stock. But you're right, some of these have really come close to our price targets, and they're smaller buys for us. Netflix, smaller buy. Google, smaller buy.
Just to dig a little bit more into the regulatory piece of this puzzle, Mark. I mean, if you are going to position yourself to make money as the EU and others do crack down on Google and some of the other big tech names, what would they be?
Well, I think, Morgan, the point is I think Google is now the it stock, unfortunately, in terms of regulators. I mean, 12 months ago or 18 months ago, it was Meta, and that helped cause that stock to underperform. And it's just another one of the overhangs on Google. I think this will take a long time to play out. My recall is that the original EU Google shopping case took 6.5 years to play out before they finally worked out some remedies. And this is one huge remedy that the EU is potentially going to recommend, or it looks like they're going to recommend, the actual forced divestiture of Google's ad tech business. That's going to be a hard thing, I think, legally to bring across the wire. But and I think it will take a long time. But it is going to kind of depress or modestly clip, I think, the Google multiple. It's kind of another reason why I have a preference for Meta. You'd have less regulatory overhang. It's cheaper, easier comps, and just more cost discipline at Meta than Google.
Mark, there have been two waves of investor excitement about AI. There was the initial Microsoft Alphabet, is Microsoft going to steal search share wave? And then there's this NVIDIA-driven wave. But from where you sit, looking at the fundamentals of these internet companies, does AI matter in the near term? And I mean the next year or two, in a way that's going to cause any one of them to significantly outperform?
I've got a nuanced answer for you, John. I think so. I think it's already mattered. I think AI processes and machine learning processes have been behind some of the improved targeting that you've seen at some of these advertising models. I think it's behind some of the innovations, like I think of AWS's customers, I think 100,000 of them, it's something like that number, are already using them for machine learning and AI. So the way I step back and think about it, you just mentioned the two stocks that the market has declared absolutely the winners of AI, Microsoft and NVIDIA. And my reaction to that is, are you sure? You sure that Amazon isn't partly a derivative off this? You sure that Meta isn't a derivative off this? I'm not sure they are, but I'm pretty certain that they're positive derivatives. I just know that they're not trading like they are. So that's one other reason why both Meta and Amazon are in my top 3 picks.